Alright, you guys, what's up? Javi here for another video. Today we're going to be going over my 2026 updated day trading strategy. So this is just everything that I've been using for the past for this past 3 months. This is officially like my what I'm using at the moment, my new strategy. Some things I've implemented that I haven't implemented before, that I haven't used before. And today's just going to be a quick little video just showing you guys what I use, my checklist, and my confluences, everything of that sort, everything in that nature, and just try to help you guys lock in psychology wise. Maybe you guys need a little refresh, just to hear it. Maybe some of you guys need to hear it to just apply it on the charts. But yeah, let's get straight into it. So the first thing coming into the day, of course, we need to determine our daily bias. So, what are we doing, right? So, for the daily bias, I like to go on obviously on my one day, on my daily, 4 hour, 1 hour, and 15 minute. On those, it's super easy for me, and those are my preferred time frames to get my daily bias. It's usually what I just need. It's more than enough, and something we can use to determine our daily bias is what fair value gaps are respecting. What are we respecting and what are we disrespecting? So if we're bearish, if we have bearish bias, we would clearly see that we were respecting bearish fair value gaps and we're disrespecting bullish. Same thing for bullish. Bullish would be respecting the bullish, disrespecting the bearish. What are we seeing? Are we seeing higher highs? Or are we seeing lower highs or lower lows? So if we're seeing higher highs, higher lows, we'd definitely be bullish. Lower highs, lower lows, we'd be bearish. And what swing high or what swing low are we going towards? So when for example, market open, we see the swing high up top, right? Are we trading towards it? Are we like trading towards it? Or like are we trading what are we going towards? What's our draw on liquidity? What do we want to go towards? So what's our draw on liquidity? So what swing high or what swing low are we going towards? That's um the last thing that I kind of look for. Like after I look for, okay, bet what are we bullish, bearish? What are we going towards? So that gives me an idea of like, okay, if we're going towards this swing high, I would like to see this get respected, this gap get respected, and then just get a little inverse and boom, boom, boom. Yeah, that's how I figure out my daily bias. Pretty easy. Second one would be how I identify my key levels, right? So my key levels, I use them as magnets. Magnets to send price a direction. So for my key levels, I go on the 3 minute, 5 minute, 15, 30, and 1 hour, 4 hour. I usually don't really use the 30 minute, but I am putting it here, and the 3 minute. I don't really use 3 minute and 30 minute, but those are valid time frames to get key levels. Um, because I have used them before and they do work. They do work, but I don't use them all the time. But that's why I did incorporate them in this video. Another thing would be the untapped fair value gap. So fair value gap that hasn't been tapped into, that would be a magnet, that would be a key level that price can go towards and get a reaction and be used as a magnet to send price either lower or higher. CISDs can also be used to send price lower or higher. For example, we get a change in state delivery. Usually, when we get a change in state delivery, if we tap back into that change in state delivery, we usually bounce off like a rejection block. So, or vice versa. If it's over bearish, tap into this change in state delivery and then trade lower. So that also can be used as a magnet. Um, I put that one here because I've usually been using that a lot this past week and have been getting pure green days. So yeah, rejection blocks is another one, another magnet. So a bullish rejection block would be a bullish wick that's inside a bullish fair value gap. So if this is a bullish fair value gap, a wick is inside here. That would be the rejection block. Same thing for a bearish rejection block. If it's a bearish wick that traded into a bearish fair value gap. So yeah, all those are magnets. All those are magnets to send price one way or another. That's how I use them. Just as magnets. And this is an honorable mention just because this has been working for me this past week and because I've literally printed 3 days out of this week on Asia market open have been like this. I see an accumulation before market open, right? So I'm already saying, okay, I see an accumulation before market open, expecting that manipulation up into a key level and then distribution um, to where price really wants to go. For example, like yesterday or 2 days ago, I had a manipulation, right? I had a bearish bias. Accumulation for market open. I had a manipulation into a bearish key level, reacted, respected that key level, reacted, got an inverse, change state delivery, targeting a 1-to-1 to the downside, hit, right? Super easy. So I usually ask myself, do we accumulate before market open? If we see a accumulation, I always do take into consideration um that what I just said, the AMD model. But if there's no accumulation before market open, this wouldn't apply. But this only applies if we do see clear accumulation before market open. So if so, market open, expect manipulation into nearest key level and wait for a reaction. So expecting distribution, wait and enter off valid confirmation after order flow has officially flipped and confluences have been supporting the trade. So the only way I would enter is, okay, let's say we tap into that bearish gap, we get that inverse, that's a confluence, you get that CIZ, confluence, that's already a flip and order flow. So that would be perfect. For my confirmations, I obviously use inverse fair gaps, but I don't use just inverse fair value gaps. I use the 1 minute, 2 minute, 3 minute. I don't really use the 4 minute, but I am putting it in there because it is higher time frame, and the 5 minute. So the highest time frame for inverse fair value gap is going to be the best probability. So it's going to be the strongest probability, and it's going to be the strongest confirmation. 1 minute is valid too. I do use 1 minutes a lot, but if there's a 2 minute that got inverse, that's even stronger. That's an even better confluence. That's an even better confirmation. So that's going to be good. Another confirmation I use is the CISD, of course, change in state of delivery, that body close below a certain, a body close below a certain body, just confirming that change in state of delivery. SMT, if applicable, because SMTs are not usually always required, but SMTs do work and are a good confluence if applicable, if you do see it. If you do get it, that's just another added confluence that just makes your trade stronger, makes your story better, but it's not necessary all the time. And another confirmation would be that, let's say we bounced off key level and we flipped an order flow. So let's say we hit a rejection block, a bearish rejection block, and we literally tapped into it and traded back down. That's also good. That's a confirmation that we got that. We bounced off a key level. Now we're getting an inverse. Now we're getting the CISD. And that's perfect. The story's adding up. Getting good story. And yeah, perfect. That's all I need for my confirmations. Now, the last part would be executing and risk management. This is probably one of the most important ones. I make sure to enter on the body close of the inverse fair value gap. So I have to wait. I know a lot of you guys see that inverse, get that 1 minute inverse already, and want to enter already just because of the inverse. No, wait for the body to close. Wait for that candle to close and to secure that inverse. Because a lot of times you get that inverse and you enter and it hasn't even closed yet, and then it just flips and you get stopped out. Wait for the close. Wait for the confirmation. So you get the highest probability. I usually use 5 to 10 micros. Usually I've been using 6 micros. I might go up to 8. Usually go for a 1-to-1 risk to reward. That's what I've been going for this past 4 days, this past week, 100% win rate. And you can also go for a 1-to-3. I also go for 1-to-3s. Because it's low hanging, it's just the easiest, it's the closest thing. Or how I put there in parentheses, the closest drawn liquidity. Don't go for that huge drawn liquidity. No, go for the closest one. Go for the close, even if it's a 1-to-2 risk reward. You know, 1 to 1.2, not well, yeah, 1 to 2. Sorry. And my stop loss at a swing high or low. So let's say my stop loss would be at the wick that it is in the rejection block. That's protected because that's in the rejection block, and that was already rejected. That already got, respected. When we tapped into that rejection block, we respected it. So that wick that's inside, that's gonna be my stop. That's gonna be protected. So if we, by any chance, were to go back there, that's statistical loss. Okay. or at fair value gap low or high for the best protection. And I usually just like to do 1 to 2 trades per day. I have my trade lockout at 2 trades. With 1 trade, I've been taking 1 trade though for this past week. 1 trade every single day. Been hitting. If I take 1 win, I'm done for the day. 1 loss, I'm done for the day. And I do trade Asia session. So yeah, that's my execution and risk management. These are just extra tips that I threw in here for some of you guys that are struggling with psychology, struggling with like just the perception of trading, or like falling into the propaganda that you see online of all these traders making all this crazy P&L. These are some extra tips. Only take the trade you would take 10 out of 10 times and that you would be satisfied even with a loss. Take that trade, wait for that perfect trade. It doesn't cost you anything. It's free to wait for that perfect trade. Don't get FOMO. It's free to wait. So just take your time, take that trade that you were proud of, that you're proud of and that you take and you're comfortable with walking away and doing stuff around your house, and that you'd be proud and that you would take 10 out of 10 times, and even if you lost, you'd be happy because you love that trade. You believed in it. So that's the number one. Base hits add up. Base hits really do add up, especially on a funded account. Those $150, $200 days, they add up. Trust me, they add up. Don't be trying to go for home runs all the time. Base hits add up. And even though a base hit is still probably like $250, $150, $200, some of you guys work part-time jobs, you make $10, $12, $15 an hour. An 8-hour shift is $100. You just made double sitting in your laptop. Base hit, it's $200 still. You don't even make that in a day. So, your style, your reality. Some of you guys need to understand this is your life. It's your journey. You trade how you want. You take the money that you want. It's your reality. If $200 is your car payment, who are you to not take $200? You know, if $200 is bills for your whole family, who are you to not take $200? It's your reality. Don't. Some people make it seem, oh, $200 is nothing. Go for that $1,000 days. No, it's your reality. It's your journey. You take the money you want to take. Don't be greedy. Your style. It's your style of trading. It's you versus you. Don't compare yourself to anyone else. I know we all like to see these trading influencers, trading gurus making so much money, and we, we see that and we're like, oh no, we want to make all this money. Yes, we do. But we also got to understand that it's our journey and it's still money. It's still real money. So who are we to not take the base hit? Who are we to not take the $150, $200? For example, me, I work a part-time job. I make not even $12 an hour. I make $11.50 an hour. An 8-hour shift for me, it's $90. So why would I not even take $150? So it's your reality. It's your style. Let that get into your head. Don't be greedy. It's your reality. So this is also a skill that 99% of people don't have. Let that sink in. If you're in a classroom with 20, 50 people, bro, the chance of someone knowing how to day trade is super small. And even though if they do, most people quit. This is a skill 99% of people don't even have. Wouldn't even try because it's so hard. So if you're here every single day showing up, be grateful. Be grateful and lock the fuck in. This can fucking change your life. It's a blessing. It's a blessing to be able to open up your laptop, make $100, make $200. I'm just sitting here. That's 8 hours of someone's day. So that's crazy. That's crazy to think about. Perception is everything. Perception is everything. So you guys need to lock in. Lock in. This is a blessing. Lock the fuck in. Get that payout. And then also the last one, that you don't have to trade every day. Don't have to trade every day. It's not a requirement. The market's always going to be there. The market will always be here. You don't have to trade every day. So if you don't like something, if you missed your entry, I missed my entry. Get off the charts. Lock yourself out. Fuck on with your day. Don't look for another entry. You missed it. Let the ego go. You missed it. It's fine. You don't have to trade. Trade tomorrow. It's fine. You know? I had that issue too. For example, this week I only traded 4 days. I didn't trade Monday. I didn't want to trade Monday. I don't have to trade every day. So it's, yeah. I hope this really helped you guys fix something in the brain, help you guys with psychology, help to refine the strategy. I just want to help, and I just want to show you guys my strategy, my journey, and I just want to help. I just want to help you guys. I want you guys to just do your best, get payouts. So just lock in. Lock the fuck in. Stay sharp and just get paid. Get paid. We can get paid if we just lock in and stay sharp.